Good morning, everyone. It's Wednesday, September 18th, and today's a big day because the Fed is going to tell us whether they're going to lower rates again or not at about 2 to 2:30 p.m. Eastern Time today. So if you're in a different time zone, please take that into consideration because when I used to live in California, it used to always happen around 11, 12 o'clock. So please be mindful of that. Today, you need to keep your eye on the bond market. Today is a very, very interest rate sensitive day. The odds are about 95%, at least that's what the bond market's telling us right now, that the Fed will lower rates. If that happens, the long bond, that's what we're looking at right now, ticker symbol TLT, or you could trade the long bond if you trade futures. That's ZBU. That's the September current futures contract. Here, I'll show it to you right now while we're trading. That's if you're a futures trader. Either way, bonds, the long bonds are trading above the 50-day moving average. They're coming off oversold territory, and I think they're going to rise. If they rise substantially, it's going to put a little damper on the stock market, which is expected. The biggest factor right now is not whether the Fed is going to lower rates or not today. The odds are they will. The factors are going to be how they speak about future projections, whether they're going to talk about dropping rates in the future or not. If they're going to say something like, we're going to lower it a quarter of a basis point, and this is going to be the last thing we ever do in the next 5 years, I'm being facetious, but you get the point. Look at their comments. Their comments are going to be more important than their actual decision because the decisions are mostly priced into this market. Now, if the Fed does not lower rates, then this bond market's going to go lower. I don't think that's going to happen, but if they do, this bond market's going to go lower because it's already anticipating a rate drop. Remember, bonds and interest rates are inverse to each other, okay? So when interest rates go up, bonds go down. When bonds go down, interest rates go up, all right? There's an inverse relationship between bonds and interest rates, okay? So if the Fed lowers rates, there's a good chance bonds will go higher. But if the Fed does not, there's a good chance bonds will go lower because they're really, really pricing in that rate drop. Now, how will that affect the economy? How will that affect the stock market? Let's look at the S&P. The S&P is stagnant right now. We're above the 50-day moving average, but we're stagnant. And I personally do not believe there's enough of a catalyst to make us go higher right now, especially with the small caps looking like they're ready to move and touch back the 50-day line. They're overbought right now. That's the RSI, and it looks like they jumped, they huffed, they puffed, and now they're ready to come back down. And if they come back down, the S&P isn't going to have too much momentum power to move forward. Remember, I've been saying this for the last few days, that the small caps are pulling us down. Imagine somebody putting a 50-pound weight to your chest. That's what it's like. Therefore, here's the takeaways for today. Keep your eye on the bond market, all right? Keep your eye out on ticker symbol TLT, especially around 2 p.m. Eastern Time. If you see the bond market moving higher, there's a good chance that the Fed lowered rates. Also, expect volatility in the stock market, but don't expect a lot of directional bias. I'm not expecting a lot of directional bias because, again, things with China and U.S. are heating up and no one knows what's going to happen. And with the small caps being still in the remaining in the toilet, excuse my French, the odds of seeing a rally from the large caps is not a very high probability. Again, I'm just trying to keep you guys out of trouble and trying to show you what I'm seeing in the market. So keep in mind on the most important thing today is what the Fed says in terms of future projections. Keep your eye on the bond market, keep your eye out on the small caps, and don't expect a lot of upside from the stock market till we see a little more resolution from China, or at least some resolution. All we keep hearing is they're going to meet, but folks, it's not a matter of two presidents meeting. It's a matter of bean counters getting together for about a month, locking themselves in a room, and then getting an approval from the presidents. Two presidents meeting and shaking hands is not going to resolve this complex trade war. It's not. I'm just giving you heads up. It's a complex issue on many, many levels. All right, if you guys are enjoying these videos, send me an email. support at marketgeeks.com or roger at wealthpress.com. And if you like this channel, please support us. Like this channel and subscribe to it. Talk to you soon. Take care and have a great day. And keep your eye out at around 2 o'clock because it's going to get dirty. It's going to get messy. And markets are going to move quickly because of the FOMC. Talk soon.